Welcome to Unfiltered Finance. I'm your host, Emily Turner, and Swen Lorenz is joining us today from Undervalued Shares. And I guess more applicable to this video is weird shit that you're going to invest in. You have specifically a conference, which is along those lines. What is it?
So I think it's worth mentioning briefly the origin of this conference.
Okay.
And it is, I'm quite proud to say now, a global conference in the sense that I host it every year in Hong Kong, London, and New York. And I hosted in Hong Kong on a Thursday, then the following Monday, Tuesday, it's in London, and then Thursday, Friday, it's in New York.
And by the end of it, you've had no sleep because of
pretty
time
much,
change.
Yeah. And it came out of a conversation I had with readers on a rooftop bar in New York. So I have this website called undervaluedshares.com, and my readers are highly informed, very passionate investors who like meeting up and like meeting like-minded people. So I organize these dinners and drink meetings in various cities around the world. New York is one of them, obviously, and someone who's highly experienced with investing in the unusual suggested at the drinks get-together in New York, Swen, why don't you organize a conference where you only look at weird shit and, like we all contribute our best ideas? And I sent out an email to my readership asking, would you guys be interested in this? And feedback was overwhelming. And this year I'm going to host it for the third time, and it's an ideas contest. So the term conference is slightly misleading in the sense that it's probably more of a think tank. It's 24 people usually in each city, 16 of which pitch their idea, and it has to be weird. It has to be something very unusual. And then I've got a couple of high net worths and fund managers sitting in, just for added sort of diversity of the audience. And at the end of it, I publish a manual where everyone who's pitched an idea has to also deliver a one-page summary of the idea. So we've got a manual with 48 ideas coming out every year, and it's usually popular, it goes viral. People are definitely looking for the unusual, I can say.
What would qualify as the unusual? I mean, what are some of the examples that fall onto that list?
So the most obvious one that everyone immediately understands is what I call legal situations. It's often called litigation finance as well. It's a bit of a unclear term, but there are a whole number of companies listed on stock markets around the world, including in the United States, in the UK and elsewhere, where the company doesn't actually really have a business as such anymore, but it has legal claims. And investing into these legal claims through a publicly listed stock can be, if it works out, can be extraordinarily lucrative because two things happen. First of all, the investors who originally invested into that company quite often are disappointed with it hasn't worked out, and instead of owning a stake in an operational business, they now own a stake in a legal claim of some kind. So they sell in large numbers. That depresses the share price. Legal claims are difficult to judge. How do you judge the merit of a legal case? That requires work, that is actual effort. And that means that quite often you can buy into these situations at a valuation that, on the one hand, yes, you have a risk that if it doesn't work out, you might lose everything. But if it does actually work out, you might make 10, 20, 50, or 100 times your money or more. And that is something that a lot of people are drawn to because you can, first of all, gain an edge through doing very diligent research of the entire case. And secondly, if it does work out, you make so much money that it can have, I don't want to say a transformative effect on your, and we talk about portfolio weightings later, but it can certainly make a meaningful contribution to your success in that particular investment year.
Can you I want to say bet, but because in my mind I visualize this as a boxing match where you are investing that this side is going to win this legal case. Is there, so say this is the plaintiff, the defendant, is that an option too? If it's a legal case, can you invest in the other side?
Yes, you can, and this is where it gets quite complicated because there are so many different ways how to do these things. And because most people wouldn't conventionally look into this particular sector, it takes a long time to explain who are the players, and everyone tries to have a slightly different approach. The term litigation finance, conventionally speaking, means to give someone money to pursue a claim, and if the award is won, then you get a share of the award. And there are a number of companies that have made it their reason for existing. They fund legal claims. So, for example, the largest one is very well known. It's a company called Burford Capital. They're listed on the London Stock Exchange and also on the New York Stock Exchange. And what's interesting about them, and this leads back to your question, so a firm like Burford Capital would look at almost every single imaginable legal claim anywhere on the planet that could be funded by someone. But of course, they turn down like 98 or 99% of them. But once a company like Burford with 150 lawyers and 15 years of experience, once they decide to invest into a legal claim, then this is in the top 1% of legal claims that has a chance of working out and working out really well. And what you can get is you may be able to invest into a company that's listed on the stock exchange and that has a legal claim, and which in turn has made an agreement with a firm like Burford Capital to have their legal work funded by Burford Capital. So it's a public company that has a claim, but if it wins, it shares some of the proceeds with the likes of Burford Capital. But that is a strong endorsement of that company's claim. So as I said, there are so many ways how to play this. And then there are also investment funds that are specialized in litigation finance. There are a couple of other listed entities that do variations of these things. It's complex, but again, this is where, the weirdos who come to the Weird Shit Investing Conference, where they love swapping notes, because anything that's complex and that is not obvious, by definition, has a chance of you may have an edge relative to other investors. So
that sounds right. I'm a former investigative journalist, so I love getting into the nitty-gritty, pulling court documents, looking at that kind of stuff. That sounds so interesting. Is this something, though, that just a regular retail investor could participate in?
You'd be surprised how many regular retail investors, to use that term, it sounds almost
right.
a bit condescending, how many of them do it. And the reason why they do it is quite simple. There are a lot of investors out there who have some money, but who need this transformative win in their portfolio to really get ahead, to get from, where they are right now to 10x or whatever it is. And I have a surprising number of readers, for example, who, one of my favorite examples, he had 10,000 euros, so make it dollars if you like, and he put that all into one special situation that did a 10x, so that took him to 100,000, and from there he took it to several million by specializing in something that he pursued as a private investor while he still had a day job, but he specialized in that one niche, and he became one of the world's best informed people in that one thing, that one sector. And there are lots of people out there, and it's the power of the internet and a desire to build wealth, and there's also an element of fun in it. And I think I've added the community element to it by creating a space where I bring these people together. I'm the host, and as such, I really curate the guest list. I don't conventionally sell tickets to the event. That's why it's not really a conference, it's more like a think tank. I have a website, weirdshitinvesting.com, which is sort of like, just an event website. And I tell everyone who wants to attend, send me an email and tell me why you would be the right person to attend. And I get a lot of emails from people who say, I want to buy a ticket. And I say, like, no, you haven't read the website. So you by definition, you've immediately disqualified yourself.
That's exactly right. And I want to get more into some of the lists, some of the items on the list. But really quickly, before finishing up litigation, is this something that you can get in and out of before a case is decided?
Yes, and the beauty of anything that's listed on the stock market is you can buy and sell on a daily basis. And to give you an example, my advice would usually be when such a company or when such a claim is coming to a point where there's a decision, and the court date when the decision is going to happen is almost always publicly known. In the days or in the weeks leading up to this, there will be speculation, the share price is rising, and I always slightly cynically say, on the day before the actual decision, take some of your profits off the table. There's a German saying that on high seas and in courts of law, you're in God's hands.
It's true. I can't tell you how many times I've tried to make a prediction about what a jury was going to say, and there's no telling sometimes.
Yes, and in a way, this is where investing is also partially speculation and market timing and in a way assessing the vibe of a market, and it can be quite often more profitable to trade in and out of these opportunities and sell when something is in the media and gets a lot of attention, and then inevitably, because court cases drag on for a long time and people chase the next shiny thing and doubts start to creep into the whole case, then you buy it back when it's out of favor again. So there's a whole journey. It's not necessarily just buying and waiting until the decision. There is multiple ways how to skin that cat.
But unlike the market, there is an end, right? Once that court case is decided, it's over.
It is, yeah. And then ideally you want to own shares in a company where the management has committed to paying out the proceeds, paying out the award to shareholders as a special dividend. And that does happen. There's a whole sector of these companies. It's very fascinating. And yeah, there have been great opportunities. There have also been losses, of course, and there have been unexpected losses. There have been, I think, delays. It's really, everything gets delayed.
In the legal system, it does. That's true. What else falls on the list of weird shit?
So one of my favorite stories of the last couple of years were opportunities where you could purchase sanctioned Russian assets through publicly listed companies and also sanctioned Venezuelan assets. So there are entities on the London Stock Exchange and the New York Stock Exchange where you could indirectly buy Russian assets, and because they are sitting within entities that are listed on these markets, you are not yourself buying sanctioned assets, so no one's getting into trouble. And these entities have to stay listed on the stock market because they own all sorts of other things as well. And there's one particular case that I found interesting, former JP Morgan Russia Trust, which now has a very long name and everyone just calls it JEMA, which is the ticker symbol, JEMA. And it was trading in London at 100 pence, and that was like picking up controversial, sanctioned, but ultimately high quality assets in Russia for the proverbial pennies on the dollar. And as soon as some speculation came, started to rise about a potential end to the conflict, and this entire mess with the sanctions has to be unwound somehow, it tripled. And the same happened in a very similar way with Venezuelan assets. So American investors are not conventionally permitted to buy Venezuelan things, but there are some companies trading on the Canadian Stock Exchange. They in turn own Venezuelan claims, one of which was a company called Rusoro Mining. They owned a gold mine in Venezuela which was expropriated, so the company only owned a legal claim. That claim went not to a court of law, but to an international arbitration court, which is again another one of these quirks that you need to understand how these things work, and very few people make the effort. So to cut a long story short, I wrote about this in my free weekly articles in 22, when Rusoro was trading at 7 cents, and then 2 years later it went up by a factor of 25 because the whole legal situation had evolved, and suddenly the market realized that there was actually loads of money to be made if it works out. So I think that should probably qualify as weird.
Yeah, I would agree. And have you kept tabs? Do you have like a success fail ratio to know?
That would be very hard to assemble because there's not even really a list of clear criteria. What would you put into this whole sector? It's a very fluid kind of situation, but I would say that I know a significant number of private investors among my readership, and I get to know my readers through organizing get-togethers and conferences. There's a significant number of people I know who've genuinely made their fortune with these things. And I would say that's also easily verifiable by just researching the relatively well-known cases that exist in this sector. And I mean, by now it's gotten a fair bit of attention. There are articles about this on newsletters and Substack articles. So much as it's not easy and it is risky, and these are often binary bets, I think the success rate is probably, let's just say it's probably better than, for example, investing in junior gold mines.
Okay, all right, we'll take it. So when it comes to where you position yourself on something like this, how do you make those decisions?
I think this very much depends on where you are in life, your age, and your level of how much wealth have you accumulated. So in the first instance, I'm a big fan of portfolio concentration, and at the same time, I say as you get older, you have to diversify more. Someone who might only have $10,000 to invest might want to, do a bit of YOLO investing. You only live once, and put everything into 1 or 2 or 3 stocks. If you're 22, you can do that, and maybe you even have to do that. If you're 60, don't do it.
Right.
Diversify. And then it depends on your circumstances. Are you doing that as something you pursue full time? I know a lot of people who do full time investing, and for them, maybe a 10 or 20% portfolio allocation to something like that might be the right thing. And for others, it's something where they should put in, 2%. It's very hard to say. It really is down to individual circumstances. And that's where people should speak to their professional advisors and consider very carefully the risks and not get carried away by these large, potential payoffs, because there is significant risk.
In your opinion, do you think everybody should have some, though?
I'm not sure if I would say everyone, but I think more people should definitely consider pursuing opportunities that are outside of the ordinary, because, ultimately what everyone wants to achieve in investing is to beat markets and to have that big transformative win once or twice or 3 times in their life. And that's something that you're more likely to get, not exclusively, but more likely to get with things that currently not too many others are looking at. And this is, usually in the weird corner. Not always. You could have bought Apple and Google 20 years ago, and that would have sorted you out.
But where would the fun be in that?
Yeah.
And so for folks who want to find your information and your resources, where would they go?
So the Weird Shit Investing Conference, as its official output, has the Weird Shit Investing Manual, where we have 48 ideas summarized on 1 page each. And usually now it comes with a couple of other articles of a sort of general nature and maybe some interviews. And I publish that for free on undervaluedshares.com every year in June, early July, after the conferences have taken place. So the last 2 editions are available on my website, and the next one is coming out in probably late June this year.
No, that's something to look forward to, other than just warmer weather.
It's certainly entertaining, and it goes viral every year.
I can't wait. Well, thank you so much for joining us.
Pleasure.
And thank you guys for watching. Be sure to click like and subscribe. We'll have all of the information that we've talked about in the comments section and the description below.